Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk. Welcome to this morning's market update on Tuesday the 1st of March. So looking at the markets, prices are actually opening again relatively flat to last night's close. Key market drivers today are number one, we've got support from oil markets once more as Brent trades just under $37 per barrel. Number two, warmer weather is suppressing demand, so it's a more comfortable outlook for the coming weeks fundamentally. And number three, we've had an announcement from the UK government planning to reform the capacity market to address the current undersupply forecast for the winters ahead. Those are your main headlines. If you'd like any more details, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at those UK fundamentals to start with, as I said, temperatures have warmed up a bit today, and the forecasts for the coming weeks are also a bit more mild, so coming back towards seasonal average temperatures. Looking at the line pack today, we've currently forecast around 10 MCM long. That's comes despite an outage at the Rough storage site, which is expected to last up until 10 AM this morning. So currently flows are at zero, but we are still expecting nominations through the day of around 32 MCM. In line with the lower demand though, we've also seen South Hook LNG send out tick down a bit from where we were yesterday. The overall demand is actually around 25 MCM lower than it has been at least yesterday, and probably more so than last week as well. We've also had Langlead nominations push up a bit, but that's been compensated by additional demand through the IUK export to Belgium, so that's sending about 10 MCM across to Belgium today. Looking at the announcements from the UK government then, as I said, this is around the capacity mechanisms, which have up until now not necessarily produced the results the government might want in terms of incentivising new build technology to come online, and certainly has forced a lot of the older, dirtier plants to turn off from April, as their margins are squeezed by higher carbon tax and lower wholesale prices. But the announcement today suggests that the government is planning to bring forward the tendering period to look at the 2017-18 volumes, and expect to do an auction in January 2017, potentially for more capacity as well, which should help address the low clearing prices of the recent auctions. Finally then, looking at the oil markets, as I said, Brent has pushed up again. It's trading just under $37 per barrel today. That comes on the back of lower output from both the US and OPEC. According to surveys, US output has dropped by around 34,000 barrels per day through the period of December, while OPEC is suggesting that there's been lower production. So the Bloomberg surveys have suggested that's more around 75,000 barrels per day reduction, while Reuters surveys suggest that could be up near 250,000 barrels per day. So that's helping to address some of the oversupply, but it's not all of the 2 million barrel per day oversupply that we currently see in the market. But it is helping support prices today, and helping some of those market players, encouraging their bullish bets on the market. That's it for today. Have a great day, and we'll speak to you again tomorrow.